Welcome. My name is Van Richards. I'm a chartered financial consultant, and today we're talking about a special company, which is Rackspace. This is one of the stocks that you all, who are the viewers, the listeners, have asked for. So I wanted to bring it to you and talk to you just a little bit about it today and answer your questions and see if I can't bring a little bit more light to this stock and help you to understand it just a little bit more. So without further ado, let's go ahead and begin into the daily stock analysis. Okay, as we begin in talking about Rackspace, the first thing that I always do is tell you this. This presentation is brought to you by my financial planning practice. I'm a financial planner. I'm here in Texas. And if you're frustrated with building your financial future, go over to richardsfinancialplanning.com and you can learn a lot more about a process that I've created that is called the Prosperous Planning Process. And I think that you'll find that there's some great information over there for you to learn about. All right, let's go ahead and begin into talking about Rackspace. And I think the best thing to do is just kind of run through the numbers and look at exactly what's been going on with the company and how it's been growing. If we look at the past 9 months, it has $600 million in multi-cloud services, which is the apps and cross-platform is down 3.9%. And the biggest loss is really in their OpenStack public cloud business, which is at $78.3 million. They have two real revenue services, which are consumption-based cloud contracts and also sales and professional services. The company's really considered to be a small cap company at $3.73 billion. And they have a lot of other big competitors that they fight against. They closed today at about $19.17 per share. That's up from when they started. Remember, if you're not real familiar with this company, it's only been around since August as a publicly owned company. Now, some of you may remember that it actually has been a public company before, and then it went private, and now it's public again. We're going to talk about that just a little bit more because I think that has some impact on the way that the company grows in itself. So let's keep going on here, going to the next one. I think that the best thing that I can do for you is to help you to understand what this company does. I found it very interesting when I went back and looked at the people that view my channel, that view this daily stock analysis. And there's been over 10,000 views, and there's close to 1,000 people that follow me now. And I thank every last one of you. And if you have not signed up to subscribe, go over and do that on YouTube, because I think that you'll find that it's a wealth of information. But what I gathered from analyzing the people who follow my information, out of the 10,000 views that I have, I can tell that most of you are in between the ages of 25 and 45. A good, at least half of you are. And I'm flattered. I'm glad that you're here to learn, but I understand what you're looking for. And I think what you're looking for is you're looking for growth stocks. You're looking for information on stocks that you can invest in. And that's why that the request was put in for this company. I usually don't do IPOs because it really doesn't fit into the model that I use, the SEC, the stability, the earnings, and the competitiveness, but I still apply that. But the most important thing that you can do on a stock is this. Number one, understand what they do. Now, if you've heard about Rackspace, do you know what they do? They're a cloud service, but let's go through that just a little bit. I think that'll help you to understand and help you to decide, to make the decision, is this a company that you really want to invest in? The biggest service that they have, that they offer, and this is the one that you heard about in the very beginning, this is the one that is the most profitable for the company, is their multi-cloud services. And multi-cloud services, some of you may know this, but for those of you that are not familiar with it, it refers to the practice of using services for multiple heterogeneous cloud service providers. In other words, if a customer of Rackspace is using Microsoft Azure and they're also using Amazon's AWS, what this cloud service will do is allow them to communicate and to work together. So that is that's their number one service. The second thing that they do is cross-platform services. And what that refers to, it refers to computer software services that are implemented on a multitude of different platforms. Let's say, for example, if you have a Linux platform and you have an iOS platform for a Mac and you have a Windows platform, their cross-platform services help those to communicate with each other. And that was actually down for the past 9 months. If we look at what their growth has been, we're going to talk about that a little bit more. I highlighted it in the video. Excuse me if I can spit it out. I highlighted it in the video in the very beginning, but I'm going to go through it a little bit more in just a moment. And then the third service that Rackspace offers to customers is their OpenStack public cloud. And what that is, it's a free open standard cloud computing platform. It's employed as an infrastructure as a service, the IaaS that some of you are familiar with. It's in the both public and the private clouds in itself. Now, remember, we always try to apply this when we're looking at stocks, and I recommend that you always consider the stability, the earnings, and the competitiveness. It doesn't matter whether this is a stock that's been around for 5 months or 50 years. It's the same principle. If it's stable, if it has earnings, if it's competitive, it is a good stock. So let's start and talk a little bit about the competitiveness. Now, you might be surprised if you read some of the propaganda on Rackspace about what they do. They really don't have a moat. And remember what a moat is? A moat is this. A moat is an imaginary barrier in between the company and its competitors. It's this. Now, when we look at what makes a moat for a company, what's that barrier that's between them and their competitiveness? One of the main things is a switching cost. And really, as far as switching cost goes, it's minor when it comes to using Rackspace services. They do have some things that they do that are special within their own company, but it's not anything that cannot be duplicated at one of their competitors. And we're going to talk about that in just a little bit. The other thing is they do have a lack of proprietary technology, which I think actually hurts them in the long run. And when we go back and we look at actually what the earnings have been over the past 9 months, the multi-cloud services has been the most profitable. It was up 4.7% in the past 9 months. That's about $600 million. Now, the other two services actually lost money in this time period, and it was down. Their apps and cross-platform services was down 3.9% at $84.8 million. And then the largest drop off we have seen has been in their OpenStack public cloud. And really, if you think about this, this is really the data center services that they have available. That was down 35.9%. They still made $78.3 million, but it was down considerably. There's a lot of competition in data centers. Now, when I look at a company like Rackspace, it's not followed a lot by analysts because it's new. Now there's a handful, and there's some significant researchers, some significant analysts that are following Rackspace. But what you're going to find is that a lot of the positive information, they're just being repeated off of what Rackspace is saying. And sometimes the analysts, when it's an IPO, well, a relatively new IPO, this company still is an IPO, their stock for their executives is still locked up until February 1st, since they just went public in August. But most of this information is coming off of their website. So what you can see actually is, it's a bullish aspect, is that the net revenue retention is actually up over the past 3 quarters. It's close to 100%. And that's really a big advantage. If your revenues are growing, you've got the opportunity to grow. The other thing that Rackspace is touting, which is a good thing, is their bookings have grown 64% year over year. And that's basically doing business with new customers in itself. And then the third thing is their adjusted earnings are up about 36% year over year. Now, the bears on this are looking at it from this standpoint. And I gathered some of this information from reading through the last earnings call. And when we listened to the earnings call, there were a couple of analysts that kept asking this question, but for some reason, it seems like that Rackspace didn't answer it. And what it does is it leaves it unclear as to the average customer size and the dispersion of their business. Now, let me give you a parallel example. If you look at Palantir, you go back and you listen to the video that I did on Palantir. Palantir is a relatively new company too, as an IPO. They can tell you that they have the majority of their business comes from 1, 2, 3, 4, 5 customers. Rackspace didn't do that. When they were asked, can you tell us where most of your customer base is? Are they large customers? Are they enterprises? Are they large enterprises? Are they small enterprises? Rackspace didn't divulge that information. And really, as an investor, I'd like to know that. If I'm going to invest in a company, I want to know where their revenues are coming from and how dependable they are. Yes, they did have good retention, but did they have one customer? Is that why it was retention? No, that's probably not the case, but that's an extreme example. So it would be good if Rackspace could let us know what the average customer size is that they have and the dispersion between small customers and large customers. The other thing that is a negative is that their cross-platform services and their OpenStack services is not growing. It's actually shrinking, and they've only been a public company for 5 months. As far as competition goes, you're going to see that there's a lot of competition out there. Now, I'm taking probably more of a speculative eye on this, but you're going to find that some of the analysts that are reviewing Rackspace are taking a very aggressive view on this, and they're looking for this company to grow 40 to 50% in the next year. I'm not saying that that's going to happen, and you have to make the decision on whether that's going to happen or not. But I'm also going to show you at the very end today what some of the options are, the puts and the calls. And the puts and the calls are really identifying what actual investors' opinions are on this. So stay tuned for that. Now, Morningstar, which I really consider a very conservative research source, when we look at their value at $19.17, Morningstar is saying that the fair market value of Rackspace is at $19.63. So it's trading pretty close in its actual fair market value. Now, I will also say that in talking about Morningstar, they actually don't have an analyst that covers Rackspace. The information that they put out there is really calculated by their algorithm. So you got to kind of take that with a grain of salt, so to speak. We're going to look at some more specific information in just a moment about what the actual analysts are saying. But when we look at the average analyst, out of 7 analysts that are following this, they're actually saying that this company is a... Yep, they're saying that it's a buy. Now, I'm not saying it's a buy, but I'm telling you that that's really the big consensus right now of the analyst. Now, let's go back and look at how this company competes. When I throw the graph up here, the spaghetti graph, you're going to see the different companies that it competes with in the graph in itself. But you have to understand this. This company has really only been in existence as a public company since August the 5th. Of this year, 2020. So it's relatively new. It's 5 months old. But then again, it's not. And what do I mean by that? Rackspace went public in 2008. And they didn't do very well. They were taken public by a company, I believe by the name of Apollo, which is actually still a majority shareholder of the company, in 2016. And then just recently, they went public again. Now, let's compare this to some of the other companies out there that do things like Rackspace. And one of the biggest competitors that you'll see that's about the same size. Now, when I say biggest competitors, What I'm referring to is a company that's about the same size as Rackspace, and that would be American Virtual Cloud Technologies. And you can see that they've actually been pretty active. American Virtual is on the spaghetti graph, the one that's going crazy. And over the past year, they've had some amazing things going on. Actually, might be a company that you look for if you're looking into investing into a more aggressive growth company. So keep that in mind. American Virtual Cloud Technologies. Maybe we'll cover that on another day. Another competitor is called SolarWinds, and they're out of Austin. Now, you'd think that if you're a cloud computing company that you'd pick a name that would be similar to what you do. But yes, SolarWinds is a cloud computing company. And of course, I think all of you are familiar with Snowflake and of course, IBM. All of these companies do the same thing, not the same thing, but something similar to what Rackspace Technology does. Some companies like IBM and Snowflake do more, but they're in the same competitive arena looking for the same types of customers. So when I go back and I talk about the size of customer that Rackspace specializes in, it would be very helpful to know whether that they are centering on small companies, middle-sized companies, or large companies. Because I can tell you that the IBMs and the Snowflakes of the world are not looking for the smaller companies. They're looking for the big fish that are out there. Okay, when we look at this over a longer time period, yes, I know that this company's only been in existence for 5 months, but you really got to kind of pull it apart and look at this company over the past year, because you want to be invested in this for more than 5 months, don't you? Unless you make 1,000,000%, and then that's okay. You could just leave it and go. But anyhow, getting back to reality, this is the past year, the spaghetti graph. Remember when we talked about American Virtual Cloud Technologies? Well, the past year for them has been pretty rocky. They started high, they went low, and the stories after that. The gold, as you're going to see, is going to be Snowflake. Snowflake's been amazing in the past year. IBM is IBM. It's plodded along, and yes, we've covered IBM here, but the issue is when we're looking for fast-growing companies, IBM probably doesn't come to mind. So when we actually look at what's happened, I like to usually say what's happened over the past year. I can't, because this company's only been around for 5 months. So this 1 year is wrong. When you look at the graph, it says 1 year. That should actually say 5 months. 5 months ago, it was trading at $16.39 at the beginning of its IPO, and today it's trading at $19.17. So in that time period, it's a 16.96%. And remember that the past performance is not a guarantee of the future results. So we have to keep that in mind when we're investing in anything. Now, this is a quote that came from a Barron's article that was out on November the 2nd. And this is from a analyst. Her name is Kathleen Shelton Smith. She's the chairman of IPO research for a firm called Renaissance Capital. And her opinion is this. She says that Rackspace, she was talking about really Rackspace and McAfee, but she said, and I quote, "It did not perform so well because they're mature tech companies that don't have the high growth that investors are looking for." And this is a lady that every day looks at IPOs. What she's seeing is that a company that's on its second round of IPO, they're trying it again, and there's some speculation as to whether that investors are really going to buy into it and keep going. Now, when we look at what the analysts, the big names, are saying, this is the number of companies. There's only about 7 companies that are following Rackspace right now. And the most speculative quotes are coming from BMO Capital Markets. They're putting a price on Rackspace in between 23 and 25, which is higher than it is today. Remember, it closed today at 1917. And the most speculative, I'll start to say speculative, but I'd say the most, what's the word that I want to use? The most forward-looking number comes from Goldman Sachs, which I was actually pretty surprised from. They're looking at a target price of Rackspace at $44. Let's hope it does that. Okay, now look, here's the thing that I think that really, this is where the rubber hits the road. And what I mean by that is this is a picture of real investors and what their opinions are. Now remember, when you're buying options, you're not really buying the stock. These are people who they're taking their opinion and they're saying that, all right, I'm going to buy a call. And remember, to educate you a little bit, a call is going to be a contract to buy a stock. Doesn't mean that they're ever actually going to buy it, but they have the option to buy it. And the calls right now, they're looking at, if we can look at the strike price, at $17.50. So what my opinion is that most people that are buying the calls right now are buying this speculatively, and they're looking at it that when it dips to below 1750, which is what I believe a lot of them are looking for, when it gets below 1750, they're going to jump back in and they're going to buy this stock. And that's where they're looking to make money. When we look at the open interest, that is the number of contracts that are for the puts, and this is to sell. There are, let's look at the number here. Open interest on calls is 4,023. Open interest on puts is 89. So there's a lot more people looking to buy this when it dips than they are looking to bail out of it or to get into it if it goes higher. So hopefully that helps you and gives you a little bit more information on it. If you just joined in, rerun the replay and you can hear all the information about the earnings, the competitiveness, and the stability of the company. And I encourage you that if you have questions about this, enter them into the platform. Alessio, I am very glad to answer this for you. If you are out there from wherever you are in the world, and I'll just tell you that Alessio is from Italy, and hey, thanks for listening. No matter where you are in the world, I know that there's people that are in Europe, that are in Asia, that are in South America, that are in the United States, that are, hey, here in Texas. If you have a stock that you have an interest in, let me know about it, because I want to help you. I want to help you to understand and educate you on it so that you can know what you're getting into. The biggest thing that you need to do besides understanding what you're getting into is you need a plan. No matter where you are, go out and find a financial planner who's a fiduciary financial planner who can actually do a written plan for you and help you to chart your course, not just in buying your investments, but in everything else financial. You won't regret it. Okay. Thanks a lot, folks. I hope you have a really good weekend. I enjoyed doing this one today, and send me lots of good information about the stocks that you want to hear about, and I'll enter that in for next week. So stay tuned for the disclosure, and I will talk to you all next week. Have a good weekend.